to wrap my head around this. First of all, when the news broke today, when I saw it early this morning, many of us in my group are asking, why are we here again? 11 banks pumped, $30 billion into the bank last month. Your initial reaction to this, El-Erian?
So first, thank you for having me. We're here because there are three things that have happened that catch vulnerable banks off sides. One, a massive interest rate increase that has caused a mismatch in its balance sheet. Two, lapses in Federal Reserve supervision and regulation. And third, deposits have become much more flighty, much more volatile. So when you bring these two things together, you can trigger a crisis at one of these regional banks that don't have the size or the diversity of the big bank.
And what our viewers will want to know, Mohamed, at this stage, does this finally put an end then to the banking concerns that we've been seeing over the last few months? Jamie Dimon, as you heard there from Mohamed El-Erian in that call, basically thinks we're nearing the end, right? The banking system is sound. Is it, in your view?
So the banking system as a whole is sound, but not every bank is sound. Viewers should be reassured because every single failure has seen somebody guarantee all deposits. So we have established a practice now that's going to be very difficult to change of guaranteeing all deposits. That is good news for the depositors. And I think that people should feel reassured with that. But we've made all sorts of changes to the system that weren't envisaged. We're making it up as we go along. The big banks have become bigger. We have changed the deposit insurance system. We have also created more moral hazard in the system. So there is an issue of what happens next. And as your reporter rightly said, the people that will suffer are those that went to those regional banks for loans. They're going to find loans much harder to get, and that's small and medium-sized enterprises.
And when we're looking at some of the shares of some of the medium banks we brought up, they're all pretty much in the red, as Mohamed El-Erian mentioned. But, I was speaking to one economist earlier, and he was basically said, look, in terms of First Republic, Mohamed, asset quality, the credit quality was pretty pristine. So just explain what was behind, First Republic's, what was the Achilles heel here? What caused the problem compared to the other two that we saw?
So this one was one of the most admired and most envied banks. It had a very rich clientele putting deposits. It had rich people taking out jumbo loans, and those rich people are very creditworthy. And it had one of the best customer service. It was envied by so many other banks, and yet it failed. And not only did it fail, but it died a very slow and painful death. It's been on the ropes since last March. And as you said, 95% of the value of that bank has disappeared. So other banks are looking at this and saying, wait a minute, this bank should have been stabilized earlier on, and it wasn't. That's why you're seeing the reaction to the share price. What was its problem? Basically, it couldn't liquidate except at a loss what it held against deposits. So once the deposits started going out the window, people realized that it was having losses. People realized it was having a capital hole. That meant it needed more funding, but the funding had become more expensive, which made the depositors worry even more. So it got into this vicious cycle that was triggered really by Silicon Valley Bank.
We heard from Jamie Dimon in the media call today, Mohamed, and he said he did this deal not to hold off recession because it made business sense. Do you buy that?
Oh, it makes total business sense. And you can see the share price of JPMorgan higher on the day. Look, they got a bank for 1/20th of what that bank was worth at the beginning of the year, 1/20th. And they've gotten some good people, they've gotten some sound deposits, and they've gotten some good mortgages. Yes, as usual, JPMorgan has made a very smart move.
Let's talk about the wild card that Mohamed El-Erian was mentioning, and that's the Fed. We have the FOMC meeting this week. Are we seeing another hike, or is there enough evidence for a pause? And how do you think, of course, the correlation with this and the banking sector and the risk of inflation? Your thoughts, Mohamed?
I would be very surprised if we do not see a hike. I expect that the Fed will hike by 0.25 percentage points. Why? because the latest inflation numbers are worrisome. Not only is inflation proving sticky, but inflationary expectation, how people think inflation will evolve over the next year and longer term, have gone up. So the Fed has got to hike. And also the Fed believes that it has different tools to deal with different issues. So it can deal with inflation using interest rate tools, and it can deal with financial stability using other tools. So I am almost certain that they will hike by 1/4 percentage point.
Mohamed El-Erian, always great to get your perspective. Thanks very much, Mohamed. Appreciate it.